Alrighty, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. Hope everybody's having a great Tuesday. Welcome back. For those of you that are in the UK and you are on holiday, hope you're coming back and enjoying a little bit more volatility today as it comes into the market. We've seen a little bit more movement, which is good. So I want to talk about a few things. First of all, I was looking at these yen pairs today, and I actually just bought some euro yen on this dip to the breakout point at 129.80. I just picked up I don't know, 15, 20 minutes ago. And, you know, I don't mind playing it on the long side as long as we can hold really, you know, in here above the 70s. We start getting below the 70s, I'll get a little bit worried about being on the long side of this. But I just bought it at the breakout point here. And look at some of the other, well, the sterling yen's just that thing's been struggling as it is. Aussie yen's coming back to the trend line. Broken trend line should be right here. So we might be finding some support. The Kiwi yen was stretching, hit the 88% retracement, pretty overbought intraday. You guys should have got that update if you were watching for the updates on ForexAnalytix. Anyway, you know, key resistance is going to be at 78 here. The Canadian yen, you know, it's trying to develop this inverted head and shoulder pattern, but really need a move above 87.50. And the Canadian weakness really came from that Canadian GDP data a little earlier. So we'll see if this thing can firm up here. But anyway, you know, the yen pairs have kind of been on my radar because we're seeing some activity here in the markets. But let's go through our majors and let's talk about the euro. So the euro hit the 127% extension. I believe dips will be we'll find buyers here at 118.10. I'm going to write down two levels. So 117.75, 118.10. It's bullish today. And, you know, the thing is we're probably going to trade back up towards 119 and maybe even further. The 119 level is the 38% retracement of this entire move. Okay. It's also the 161% extension of this move lower. So that seems like the next logical target. So we'll have to write down 118.45, then 119. Okay. And like I said, it's bullish now. You know, false breakdown. Now we're taking out these highs. You can, you know, just say, well, you know, we broke this, you know, trend line, all sorts of reasons why, you know, we're turning back up into this range, but that false breakdown has really allowed for us to do that. Huh, what happened here? Interesting. Give me 1 second, guys. Let me deal with this for a second. All right, here we go. Now, let me see chart. And let's do this. I don't want that template. I want templates. Nope. Chart layout. Hold on. Sorry, guys. It's not the one I wanted. Sorry, guys. I don't know what happened here. So there we go. Okay. Now I'm back. Okay. So where were we? Euro. Got it. Okay. Let's talk about the cable. So sterling, we're at the 50% retracement. You can see that resistance right here at 130, 137.90, right? So that's been resistance that we've been marking up, and we went as high today as 138. I think that's as high as we went. Yeah, we sure did. So that's going to be resistance. I know we wrote 137.90, but 138 is resistance today. Cable's trading a little heavier. I'm not really too sure where support is other than this low right here. So this is going to be 136.80, but that's pretty far away. I doubt we're going to see that today, but oh hell, you never know. I'll write down 136.80, but we're still range bound. Aussie looks better, and we are above this this trend line here. Okay, which support is 72.80, right? Resistance at this stage is going to be up here at 74 cents. So $72.80, 74 cents. We're not bearish anymore. We're keeping that in range. Kiwi. We squeezed, right, in Asia. So hold on really quick. It's a hell of a squeeze too. Like I said yesterday during the daily roundup, I said there's a lot of people out there that are very bearish to Kiwi. And there's one guy, and I told you I wouldn't mention his name, but there's one guy, he's a fund manager, and he's just keeps reciting like bearish COVID cases or high COVID cases in New Zealand. I'm like, oh boy. I'm like, you are definitely positioned wrong right now. And this has been over the last couple of days. I'm like, yeah, you're going to get squeezed. And, it's pretty evident when, people start to show their hand, like, you could tell he was obviously short. So, we squeeze above 71 cents. We're going to head up to 71 and a quarter, probably pretty easy. And I believe while we're above now 69.90, false breakdowns in a lot of these, right? So 71 cents is resistance. Dollar Canadian. So we held support. The weak GDP numbers are keeping the Canadian from, looking too bad here. But I still think the risk is lower. And this previous resistance is acting as current support. So that is going to be, let's call it 125.70. And then below that is going to be right here at 125.35. So, oh, shoot. Sorry, guys. Oh, I did write it. I just did not move my cursor. That was the problem. Okay, dollar Canadian, 125.35. 125.70, right? Is that correct? Looking at the Canadian quote right now. Yes, that's correct. Okay. Resistance for the dollar CAD, it's going to be right here. But God, we're so dang close. I think we have to write just 127.10. And we're going to leave it in range right now. For now. Okay. Swissy. Oh, look at that. 91 cents, 92 cents. US dollar, Norwegian krona, holding the 50% for now, but while we're below 873, we have to stay near-term bearish. 873, and then 862. I'm going to keep it as in range, but I'm more bearish to the dollar Norwegian krona today, meaning that I wouldn't play it on the long side. Me personally, I'm actually hoping this double top doesn't completely play out. I'm going to look to be a buyer somewhere down here around the 850 level. I'm just hoping we see it, and then I can try getting on the long side with a tight stop. But we might actually get all the way down here and complete it. But anyway. Dollar Mex. Finding support here at 2006. After that is this trend line right through here. Which comes in at 1991. So 1991, then 20.06. And resistance right now is strong at 2017. Okay, keep us in range here. Dollar yen. It still looks constructive while we're above 109.60 and then resistance 110.25. So 109.60, 110.25. Keep that in. Oops, shoot. Wrong spot. 109.60, 110.25. Okay, dollar index. Let's redo that. Dollar index is I'm thinking this might be it. So support in the dollar index, channel support would be right here. You notice, see this low right here and the high right there. So that's a 78% retracement. So that comes in at 92, let's just call it 92.15. So I think that is channel support is going to be big. Resistance intraday is right here. So as long as we're below 92.80. I think it's going to have more intraday downside pressure than anything. Personally. Moving right along. S&P. So S&P still holding up. 45.65. That's the upper end of this. 45.65. Bullish. Support. $44.65 and then 44.15 maybe. See what we had for yesterday. We had 4,400, but see, this is a rising trend line now. So, you know, I'm almost willing to put 44.25 actually now. Yeah. Okay. Continuing on. Okay. Sorry, just looking around really quick. Silver. Man, we're trying to hold desperately above 24. So resistance now is at 24.50. Support. I mean, I would give it down to 23.40, but 23.40. But you have further support here at 23.70. And resistance now is 24.50. We're off of bearish, right? Now we're range bound. Gold, I mean, we have to break above this to turn bullish. So that's 1830. 1832. Support 1770. And Bitcoin still bullish. Intraday support right now is 46,250. And the reason why I'm looking here now, not at this support, but now I'm looking at this support, is because Ethereum is breaking higher. So I've got to keep our focus on upside here on the Bitcoin. 46,300. Resistance is 51K. No, 50,500. But really that 618 comes in at 51. So it's a tough call. I'm going to go 51,000 and oops. And it is bullish. Oops. And I know I had US dollar, Norwegian krona. That is a double top. We have to assume that double top is going to play out. So I have to put that back into bearish. Yeah. Okay. So the bias chart is finished. Bias chart is finished. I'm going to let Stelios take a picture of that. And then Steve is going to take over here and
done.
Thank you. And he's going to take you through the rest of today. So good luck, everybody. I'm going to do a couple of things, get my kids ready for school. So thanks everybody for joining me today. Glad to have you all back. And I'll see you guys on the daily roundup in a couple hours. All right.
Thank you, Blake.
All right. Thanks, guys.
Thank you, mate.
Steve-O, did you see the US house price print? It came in about half an hour ago. The highest print on record, year on year, 19.1% up. And obviously, you know, there's lots of factors for that. Materials being one of them, and but yeah, transitory.
Yeah, none of that is obviously surprising.
Yeah, this is a fun word, isn't it? Yeah, so
Yeah.
we're seeing.
Let's see for how long they will be able to maintain the pretense that everything is under control and they're willing to do what needs to be done once there is a real problem, because of course they don't want to acknowledge it.
Yeah, the problem we have in the world in general is that the economies are not, you have high inflation, you have employment which is bouncing back because we lost so many millions of jobs over COVID, but the economies are not doing great. You had the Chinese PMI early today, which went back, I think, to contraction. So it's not a great situation to be seeing inflation rising, being a central bank, and knowing you have to do something and tighten, and by that you're going to kill whatever economic growth you're getting. So it's a very difficult situation. I kind of understand Powell and all the others who can probably see all this. I mean, not probably, they understand, they're economists, and they realize that any move they make to tighten in any way is going to it's going to cause problems, and they really don't want that.
Of course they're fully aware of that. There is no question about it. I mean, just by looking in comparison their behavior, for example, in the depths of the Great Recession of 2008, the lowest we took rates was 1%, right?
Yeah.
And we had smaller quantities of quantitative easing. Now, supposedly, they want to persuade us that the economy is doing great because it's rebounding strongly from a temporary disruption, right? Because everything else was perfect. But for some reason, the rates that are needed are zero, with the time horizon for leaving them at zero being undisclosed and unknown at the moment. We have a 120 billion per month QE infinity, and there are some prospects of somewhat tapering over time, just the size of the monthly purchases.
Yeah.
So there can be only one of the two possible explanations about that. A, the economy is at a much worse shape than it was at the depths of the Great Recession in 2008. B, the economy is just at a much bigger bubble than what was created post 2008, and the only way to sustain this bubble is have unsustainable monetary conditions. Now, make your pick.
Yeah, exactly.
I mean, what I said is not subjective. I'm just gave the actual monetary policy of 2008 and the actual monetary policy of 2021, right? This is 100% objective. So, just by comparing these two, what kind of conclusion can you draw?
Yeah. Yes. Anyway, in markets, the dollar is dripping again a little bit, even though equities are now red, but I don't expect that to last very long.
That would be a blasphemy.
We've seen this movie many times, right?
Yeah. Many sequels.
Yeah.
They all look the same, like Rambo movies.
Exactly. Yeah. Cryptos are the ones on the move, and I don't know what macro element has changed.
Mostly Ethereum, which we had talked about this most likely being a triangle, in this case a flat top triangle. Bitcoin is in a symmetrical triangle, Ethereum is in a flat top triangle, and we are attempting to break above it as we speak.
Yeah, that's going to be a big technical event.
Very likely. I mean, it seems legit, technically speaking. It seems legit. Yes. And the next upside target is the 38.16, the 78.6 of the high to the so far triple bottom that we had over there. So in the short term, it looks like it's it's a real move. We're also attempting to break above this descending trend line resistance in the RSI, pointing to a possible even acceleration in momentum to the upside. So I'm not surprised by that development. Bitcoin, though, is failing to follow suit so far at least.
Yeah.
Might be, you know, that big part of the crowd that's investing, okay, put that in quotes, in cryptos is very, very sensitive to the actual nominal price of the asset, although it, theoretically speaking, it shouldn't matter at all, right? Since you have the ability to buy fractions of it, and you know it's still the same investment. But I think the vast majority of the crowd that buys these is so immature, having to do with investing mentality, that for them it matters. So Ethereum seems a more attractive target than the $50,000 Bitcoin, and you know, so on and so forth. Here's XRP, here's Dogecoin. They might both be in some type of little bullish consolidations as well. That it is, right? Something like that. So, you know, they might, all the smaller ones might follow suit as well. Okay. Anything else, Stel?
Not really. I was just going to mention that we have this week is pretty heavy with data. We have Australian GDP tomorrow. We have PMIs. We have ADP tomorrow, and of course payrolls on Friday. So I guess the market is probably going to be now moving on to the next big thing, which is payrolls on Friday. You know, we keep going from one to the other, waiting for some big move or big event, but we're not getting it yet. But otherwise, you know, the markets are very quiet. You know, FX is moving a little bit. As I said before, it's only really cryptos and Ethereum that are making a move. Everything else is relatively quiet.
Something is very strange here. Yeah.
What's that?
I thought something is very strange here. Analysis didn't seem to be loading. Look at this.
Oh.
Give me a second. What the hell is this?
The prices here seem to be refreshing on your trading view, or maybe a little bit. Oh.
Give me a second, still.
Yeah.
Took it to the other screen. Let me see, what the hell is this? Let's see if it works. Okay. Problem seems to have been restored. Let me bring it back. Oh, did I bring the wrong one? Probably I did. This one. Okay. So let's see if it now works. Yep, it does. Okay. Sorry about that. So,
Cool.
you know, one of the things I wanted to mention today, because we hadn't had a look at it for, I think, since last week, is copper. We are seeing this move lower in the dollar. Once again, I think we can safely delete now this, and we can probably safely, shit, didn't mean to do that. And we can safely turn this to blue. Perfect. Okay, great. So since the dollar seems to be moving lower, one of the things I'm monitoring here is copper. Copper had this corrective move lower, which, as you see, was rather shallow, having to do with its price retracement, but definitely took some time. I mean, we found the high at 10th of May, and we're currently at the last day of August, right? So, you know, this might prove to be enough of a correction in time. So this is one thing. By the way, we have data, Stelio. I hear the Chicago PMI, I think, right? Yeah.
Yes,
66.8
slightly weaker, yeah,
versus 68 expected. So it's weaker than expectations and much weaker than the previous reading, which was at 73.4. So this is, a rather large move lower in comparison to last month's Purchasing Managers Index from Chicago. Another indication that the quote unquote recovery is at least slowing down. So yeah, copper is one thing that's in my radar. Now, having to do with the rest of the metals, again, what's wrong with? Something is wrong with TradingView. You see, I just changed the chart and analysis isn't loading.
You sure it's the same? There's quite a few.
I'm absolutely sure.
FACE, USD, and all that. Quite a few sources.
I'm absolutely sure because you're right. Because I changed it, might be a different one because I wasn't at my list of. Let's see, we'll find out now. Yes, you're absolutely right. That was a problem in this case. Okay, so gold, nothing has changed here. It is consolidating above this channel. The way that it's consolidating, not pulling back, tells me that likely we're about to continue moving higher. Silver at the same time, I don't really see anything very bullish in the way silver has moved from the lows, but it is a fact that we're currently testing this channel's trend line resistance. So keep that in mind. Above it, we have a technical event, right? Nothing has really changed with crude oil. Crude oil, as you see, looks extremely similar to copper, right? I mean, the same type of corrective move, more or less the same type of extension having to do with, time. No, actually, it's a little bit less. We are a little bit far. We are somewhat far away from resistance, but not that much. In my opinion, we break through 71 and a half in crude oil, and that's it. In my opinion, we're headed to 80 next. And yeah, I know that people didn't think we can make it to 80 when it was trading down at 11. If we're talking about the continuous, or if we're talking about the future contract, it was, where did that settle, Stelios? Minus 40? What was it? Minus 41? What was it?
Yeah, somewhere there. I don't know.
Yes. The people thought, that crude oil is going to be like something that people are going to be gifting to each other. We had explained multiple times, both you and I, that, this is an illusion and crude oil would be headed higher once again, but you know how it is. The market becomes extremely bearish, at the lows and extremely bullish at the highs. So, it is what it is. Now, what else? We already talked about cryptocurrencies, especially Ethereum seems to be extremely strong today. Now, having to do with currencies themselves, listen, DXY is pushing further down from the highs. We're back within this previous triangle, not a very reliable triangle. I mean, there was just two prices, right? I mean, somebody could redraw the triangle like this and nothing would really change. What is mostly important here is that, in my opinion, the move higher has unfolded in a corrective fashion, and for that and all the obvious fundamental reasons, I can find myself being really bullish. The dollar, I'm actually already bearish and short USD NOK, and looking at the Aussie attempting to break higher, and the rest of the assets. I think, look at the continuation we've had today, for example, in the euro. Euro likely has broken above this descending wedge after producing a false breakdown, because we had this lower low below the previous low on the 38.2, which lasted for like half a day. So I would be very, very careful being long the dollar in any type, shape, or form. Cable, at the same time, most likely has been in this corrective channel, and this might have already run its course. We break through. We're currently testing the confluence of the 50 and the 200 DMAs. Roughly at 138. you want to give it a little bit more space for the channel, let's say 138.30. Above that, in my opinion, we're most likely looking for a push higher towards and above the 142.50 previous highs. So I see no reason why I should be bearish here either. In any case, the vast majority of the currency pairs you look at, dollar, doesn't look that healthy. In some of them, it looks more of a, they emit some kind of a neutral bias, and in many others, it feels like we've run the course of a corrective move and we're about to continue on our merry way to lower lows. Now, one thing we didn't mention yesterday, and there was a good reason for that, is because nothing has really changed, is the USD yen, right? USD yen still trapped within this descending channel. And yes, I know. Where is it? Here it is. It's not by accident that the exact same thing is happening here with the 10-year yields, right? Stelios mentioned in the F.A.C.E webinar the case of bonds being lower, meaning yields being higher, and I agree. Timing it is not easy for sure, but the next big move, whenever that happens, is going to be higher. Now I'm talking about yields, right? Now, yes, it can prove to be the case that we might need a little bit more time to consolidate or correct lower, but I don't think the move lower in yields can be a really strong one from where we currently are. I think the next big move is to the upside whenever that happens. And in my opinion, I've said before, the catalyst is going to be the realization that the Fed is all bark and no bite, having to do with their intentions to do something about inflation, right? There is a limited period of time that they can pretend that they're willing to fight inflation before they actually do something for the markets to keep believing them. And in essence, they're living on borrowed time having to do with that. I know what's going to happen. I've been spot on in the vast majority of the cases having to do with their policy shifts in the past. And I'm afraid I'm going to be spot on in this case as well, meaning I think that whatever they end up doing is going to be extremely underwhelming and extremely limited. So it's going to be completely unable to fight inflationary pressures. And once the market realizes that, that's going to be the time of reckoning. And that's going to be when yields are going to be flying higher and we're going to have, a real issue there. And that's probably going to also be the catalyst for stock markets to really dive lower, because at some point the Fed is going to actually have to do something, something real, and not something like pretending it's doing something. And the markets are going to really be scared of that moment in time that, the party is over and, the punch bowl is going to stop getting spiked, at least, at such an extreme manner. And you know how it is. The higher you fly in altitude, the more powerful engines you need in order to sustain yourself, since the atmosphere is, much thinner. And, think of the stock markets like a plane that has already flown to its maximum altitude. And, we take away a little bit of the, a little bit of the engine power, and, it's going to immediately stall. So think about it like that. And that's how I think it's going to play out. In any case, Blake had the same problem. Okay, so there must be some kind of a small outage with TradingView, probably some kind of a server kind of issue, but yeah, but nothing major. Obviously, they seem to have it under control, because some of you say that you've had the issue as well. Anyhow, nothing really spectacular to mention today, just a continuation of what we recently had. We're seeing this little pullback in stocks, which I would, in my opinion, doesn't even register, right? It's a joke even talking about it like some kind of an event. We need to see a lot more to even consider something happening. And the first thing that needs to happen if we're talking about the S&P, which is in any case the global barometer for risk, is to see this trend line support being taken out. And we're definitely some distance away. Let's see what the USD CAD is doing, since we've had an alert there. By the way, here's the USD NOK. A little bit of a rebound, but nothing. I hate how they've done that. If you by mistake double click, it brings up the same instrument to all windows, which I don't understand why somebody would want to have in all. What kind of a shortcut is this? It's a stupid shortcut. I mean, I don't even understand the usefulness of it, but whatever. I'm not in charge of the development team. Otherwise, I would take it away immediately. So USD NOK, a little bit of a rebound today, back testing this broken double tops trend line support. So far, nothing to see here. And here's USD CAD, which is literally striving after the weak Canadian data. For those of you that didn't pay attention, we had weak Canadian data having to do with GDP. Quite a lot. Month-on-month GDP was significantly lower than what was expected. And most likely this has led to a little bit of a Canadian weakness. And that's why we're seeing this rebound in USD CAD, which is helping the USD CAD maintain the uptrend within this ascending, let's call it a channel. I'm mostly paying attention to the trend line support for the time being. Okay, so yeah, for the time being, no breakdown here, but in my opinion, it looks rather weak, and it's likely a matter of time before that happens. Now, another thing to talk about is silver and gold miners. Here is SIL, right? We haven't had a look at them for quite some time. We've had this little rebound here. Somebody can even see a little inverted head and shoulders formation. Let me bring the 4-hour chart here. There we go. So right, you can see this is the 4-hour chart, by the way. There we go. And you can potentially see a little inverted head and shoulders formation playing out here. Right. So we're seeing a little bit of a rebound starting. Let's see if this is the beginning of something bigger. And here's the GDX. And the reason I want to mention the GDX again is because it's finding once again support. Guess where? Right, you remember this super important area around 31.5, right? So this has provided support once again. So let's see if this is the beginning of a bigger move higher. In my opinion, GDX and SIL have retraced to extremely appealing levels. I think this is more or less a gift horse because, as I mentioned before, how I do think the scenario with rates, nominal rates, like don't get confused because I'm more or less expecting now that I'm going to have some kind of a question like, yeah, but if you expect rates to go up, why do you expect gold and silver to go up in tandem? And the answer is because I expect nominal rates to jump higher when the market realizes that there is nothing that's really being done about inflation, but I still think that the nominal rate jump is going to be a fraction in comparison to the inflation, right? Currently, we already have a huge discrepancy between inflation and rates, right? Huge. We currently are in like almost 5% negative real rates, and that is assuming that the reading of inflation is accurate, which it isn't, right? And the market is not responding to it because it believes it's temporary. So once the market has to actually respond to that, the move is going to be huge in precious metals and accordingly to the gold and silver miners, irrespective of the fact that nominal yields will be jumping. Anyhow, that's it more or less. I don't have much else to say. I'll be more than happy to answer some questions. Yeah, SILJ, Laura. Is in a similar situation, right? You see it here. So yeah, you can see, I think it's a very, very similar situation. Theoretically speaking, we have the potential for a little bit lower targets, but I think we've already reached really appealing levels. Look at the RSI divergence here as well. I think it's getting to it has already gotten to an area that's very, very interesting. Now, I know that technically speaking is very early to claim that we've seen the low, but even if we haven't seen it, I don't think it's far away. IBB cap and handle. Let me see. IBB. Let me see. Yeah. Cap and handle. I wouldn't say it's really beautiful. I mean, I see what you mean. That's what you mean. Sure. It can be. Yeah, it's not the most good-looking cap and handle I would have seen, admittedly. But yeah, it can be, and undeniably, it looks rather strong at the moment. But look at the RSI. RSI is definitely uninspiring. US consumer confidence, by the way, we just got the data, huge plunge lower from 124 to below 114. That was the forecast, with the previous one being at 129.1, meaning
that's bullish, man.
Yeah, meaning we got a move from 129.1 to 113.8 in a single month. In my opinion, this is related to the conversation we had before, Stelios. You remember that Blake asked, yeah, but when is that going to affect, and I said imminently, because, the stimulus is being withdrawn. I think that's a pretty decent indicator, right? Consumers now have to bear the weight of buying stuff at a much higher price, and the stimulus money is running out or has already run out. And I doubt it's going to be easy to push through more stimulus. In order for them to do so, they're going to have to go through the process of lockdowns again. But looking at the political situation in the US at the moment, doesn't really look to me that it's politically easy to push for more lockdowns. I'm pretty sure that several states are not even going to follow. So I think it's going to be a very, very tough thing to sell. And unless they go in a lockdown to have the excuse to throw around stimulus bills once again, even the infrastructure plan is not going to help the consumer directly or imminently, right? I mean, infrastructure plans and infrastructure spending is something that bears fruits into the future, and quite deep into the future, like at least a few years down the road. So yeah, I'm not really sure what they're going to do to compensate for that. What is my target for the NOK? Sure, let's have a look at it. 765. That's my target for the NOK. Initially. And, we see about it, whatever else the market can bring. I'm very, very, very bullish the NOK. I have been, I rode through almost the whole downturn, and I think there's a very good chance there's a lot more to go. Comparing the two economies, it's not even fun. I mean, fundamentally speaking, comparing the two economies, in my opinion, is like comparing, a supermodel with a 90-year-old lady, something like that. So, I know that fundamentals don't play out, imminently whenever you have some fundamental shift, but inescapably the market has to follow them sooner rather than later. And in my opinion, that over there, as I said back then, is a generational high in the USD NOK. That 12, I don't think we're going to ever see it again, ever. And I think this reversal is the beginning of a much, much, much bigger trend to the downside. Yeah, unicorn high. Yeah, exactly. I don't think in my lifetime I'm going to see that level ever again, if ever, or anybody does, no matter how long I get to live. We'll see. You can never be 100% sure with the markets, but I have to tell you that my level of confidence in that is very, very high. Anything else, guys, gals? Bye-bye, Alexander. See you tomorrow, mate. Natural gas, sure. There we go. So, and gas. As we explained yesterday, we almost tagged the upside target. We seem to be pulling back, but I really see nothing bearish yet, right? We remain in an uptrend. First soft area of support from this point on should be considered this support area, right? So first support area is at, like, let's say 416, 417, something like that. Held both yesterday and today. Now, breaking through that won't mean anything, right? I mean, yeah, at some point we have to break some soft support levels, but for the time being, I see nothing that disrupts the uptrend. And in my opinion, if you want the bigger picture, as long as we remain above 339, we're going to still be in a bullish trend that, in my opinion, can get us to much, much, much higher levels than most people expect. Cat, I'm assuming cat is caterpillar, isn't that right, mate? Yeah, it is caterpillar, I was right. Okay. We had some kind of a top there. There's no question about it. Nice wedge. We broke down from it. We fully retraced it, as we should have. The problem is that I'm not convinced that we're done. Correcting, I mean. We've now entered like some kind of a consolidation, which might be part of a bigger corrective move, right? So I wouldn't be surprised if it plays out, in more or less this way. And in any case, as long as we trade between these levels, what is it? Let's say 200 and let's say 225, right? You know, there's no reason to be short-term nothing, not bullish, not bearish, you know, short-term neutral between these two levels. Snap. Okay, this one, you know, clearly jumped above these potential triangles, trend line resistance following earnings, and it has maintained its gains in some kind of a consolidation. Oh, God knows what it is. It's too early to say. We don't have much price data yet. Might be some kind of a flag. So for the time being, I would have to say that the upside remains, you know, the most appealing side to be, with the next upside target being at 89.50. Nice. What is nice? Is this the one? Okay, this is the one. Okay. We are clearly at all-time highs. So that on its own is a reason not to be bearish. You can make the argument that that was a cup and handle formation also, right? Which would have an implied target roughly of 370. So no reason to be bearish above this area, but I'm a little bit troubled by this huge RSI divergence. But that's not enough, right? So in any case, bullish against 258 is the only thing you can be here. Okay, guys and girls, thank you. Have a wonderful rest of the day, and I'll see you again tomorrow.